Hey, Wolf. Yeah, it's not easy managing a tech fund these days. Take, for example, the performance from last year. The strategy returned nearly 1/7 that of the S&P in 2021, according to HFR. So for the first Delivering Alpha newsletter of 2022, we wanted to get a gut check, a pulse on what it's really like out there. For that, we sat down with Tudor's Ulrike Hoffman-Burkhardy, who's launching a new long-short equity strategy focused on technology and disruption. She said that the recent sell-off in equities has more to do with the pace of rate increases than higher levels overall, and that sharp hikes should slow for the rest of the year.
I think at this point, we are probably overdone on some of the growth software sell-off. And it's more about going into hedges that now help you price in maybe an overall slowdown on the index level, much more so than in those particular areas of technology.
While using indexes to hedge, she's bullish on two sectors in particular, semiconductors and data infrastructure. She says they're each plays on the growing consumption of data in the digital economy. To watch our full interview and subscribe to our newsletter, you can go to deliveringalpha.com. Guys.
Leslie, when everything moves in one direction as it did last year, albeit in the direction we want to see, harder for these active hedge funds to significantly outperform and make their case to clients that they warrant those higher fees. I guess they welcome this volatility, even though it's been negative to start the year. The hope it continues this year and they can potentially show clients that they can always create positive returns despite what the headline indices are doing.
Yeah, that's the bull case for hedge funds, and that's what they market to their investors, this idea that when there is choppiness, when there is volatility, they, of course, can go short and do go short in order to hedge some of that, protect their downside, and therefore this is the appropriate time to be investing with hedge funds. That's what they tell their investors. We saw that, of course, in March of 2020 when the major stock indexes took a big hit related to COVID. The hedge funds did outperform during that time period. They were negative, but not as negative as the overall indexes were. Of course, they rebounded since then. And last year we saw underperformance from hedge funds once again because it was a bull market. Now, with this regime change, the potential for less liquidity in the system, rate hikes and so forth, hedge fund managers are saying there's good stock picking selection out there. There's good dispersion. These are the environments where we really thrive. We'll see if that plays out, though.